Welcome to our daily market update on Wednesday, the 1st of April. My name is Chris Marshall, Head of Investment Strategy here at Dragon Investment Managers. As we look around the markets, early hours today, it's around 7 a.m. here, UK time. We're seeing some losses across the Asian region and also in the futures contracts of US and Europe. This really coming off some of the announcements that President Trump made last night around America potentially facing a very painful 2 weeks with infection rates and death rates looking to increase quite significantly. As we look to the price of equities and what markets have been doing, of course we have seen a few good days since that bottom just over a week ago, and this is really investors taking some optimism from both the central bank action as well as fiscal policy measures around the world, which we have to say are unprecedented and have been done at an extremely fast pace and with some great coordination between the lawmakers and central banks. When we look to see whether this is the bottom of the market as such, I mean, one of the things as investors we're always asking is how much bad news has actually already been priced into an equity. And certainly there has been an awful lot of bad news going around, and so most of the current thinking will have already been baked into that price. Where we see potential for some more volatility, as well as some perhaps lower prices on broad indices, is around the earnings announcements that we have yet to see coming through for companies from quarter one. As well as probably the earnings announcements and real economic announcements from Q2, which of course we won't see until we get into kind of the back end of the summer. These can, of course, dramatically affect the equity prices, because really the equity prices on the long run will be reflecting the cash flow of companies. And while we fully expect those companies to get back up and running and share prices to rally once more, the longer that we see economic shutdown to really stave off coronavirus infection, of course we see a combination of things going on, including kind of an atrophy that will be happening in the real economy. It's kind of certainly within the small to medium enterprise space, which will probably come under quite a lot of pressure, and why we need such big fiscal measures to really keep this suspended animation while the economy is essentially paralysed. The other thing that we could of course see is rising government debts, and this is really off the back of those fiscal measures we're talking about. And this is one of the areas that potentially we see a dislocation of how countries respond to this. In terms of their ability to both implement fiscal measures and the levels of debts and budget deficits that they are already running with. In this regard, one of the stress points is definitely that of emerging markets, where they have been running some pretty high budget deficits for a number of years. It's a very broad brush approach and maybe oversimplistic, but in general we see fairly high budget deficits there. We also see fairly high debt levels. A lot of the emerging market countries, of course, borrowing dollar-denominated debts to build infrastructure and really try and progress the economy at very low interest rates during a period where credit has been fairly freely given. This, of course, now is coming back round, and not only do they have those budget deficits going into this, they're likely to see those increase as they need to try and employ their own fiscal measures. And then, of course, we add on top of that many emerging markets borrow in dollar terms, and if we see an appreciating dollar like we have in the last quarter, then of course this adds to the kind of the economic pressures that they will face. And so looking to some of these key regions will be paramount to really understand the pressures which are kind of bubbling under the surface in this market, and how much the central banks will need to be doing to really kind of stave off this becoming a financial crisis. It's the EM issue that has seen the US Fed come out with some increased swap arrangements and also offering other central banks around the world the facility to swap US Treasuries that they may hold on their balance sheets for dollars. This will certainly help to ease it, although we'll have to see how many EMs actually take this up. For us, of course, we are looking at portfolios both in the near term of how we position these for clients. We continue to hold fairly good cash balances, as we do believe that the market volatility is not over, and we could see some bottoms yet to come. But also we are looking ahead at how coronavirus really impacts the future of global trade and globalization and spending habits, as this will be key for our longer term strategic allocations. And perhaps on future daily market updates we can kind of deliver those as we bring those together as a team. So that's our daily market update for today, Wednesday the 1st of April. Many thanks from all of us at Dragon Investment Managers.